Let's go now to our friend Bimnet, a BB from Galaxy Trading. As always, Bimnet, welcome to Galaxy Brains.
Thanks for having me.
So another week in the books since we last talked. I think you well enunciated a near-term bearish case for BTC last week. Where does it just stand now in your mind? I mean, we've had a whole another week in the books. We've traded sub 40 finally after as low as like maybe what the low 38s. Yeah, 38.5.
Yeah.
A little bit of stability right now, just at 40K.
Yeah.
What are you thinking now?
I think 40K is kind of a crucial level. I'd like to see us sustainably like have closes above 40K for me to start getting constructive about the market. I think right now what you've seen so far is 38,500 and like the 100-day moving average. Those levels have held as support, whether that's from organic, demand or from short covering or from gamma hedging. It's tough to say, but Bitcoin has certainly found support in a region that you would have thought should have been like the first line of support. And now, in order to get more constructive about an upside scenario, you really need to see 40K hold as support.
Yeah.
Right now we're hovering in and around the level, and it doesn't seem like there's genuine, like organic, like robust demand right now. However, what is notable is that grayscale volumes have started to decrease. And eventually, that flow will abate. There is a level at which, folks are going to stop converting out of grayscale. But that still might be a couple of billion or 10 billion.
Weeks even more.
Couple weeks. And so, generally speaking, I think the market is trading pretty healthily or okay.
Yeah.
And I think corrections in a market that have moved 160% in a year, or even just in the last quarter, like the move that Bitcoin had, I think a correction like this is very healthy. You're talking about 20 to 30-ish%, off the highs. I mean, I think that's, as long as we kind of hold here, it tells you you're still probably in an uptrend.
Yeah.
But it really depends on what kind of time frame you're thinking about this stuff. Right. Like I'm pretty confident that, as soon as, the grayscale overhang kind of abates, that just the passive inflows are really going to, take this market higher. And so, if you're sitting back and thinking like, is now a good time to, get into Bitcoin, I think it's an okay time to start averaging in over time. And, and I think that's what a product like an ETF is for. Right? You dollar cost average and you make it part of your 401k allocation, et cetera. And over time, you build a reasonably sized position.
Yeah. I think it makes sense, to your point about the healthy corrections. Actually, if you look back at the 2017 bull run in Bitcoin, there were literally 20% plus corrections during that run from $800 to $20,000. I forget the number of corrections from 2021 or 20 and 21, but there were a similar large number. I mean, people only remember a number it went up, but actually it was volatile. So I agree, totally healthy. You also have, look, this is a wall Bitcoin's got to run through, right? I mean, think about this. People have also been talking a lot about the Mt. Gox coins, which I'm of the belief won't really be distributed for another 6 to 9 months anyway. But that's also, we clear those out. You're not going to go to, I don't know, 100K, $1 million of Bitcoin without resolving these things. So it's a core thing we've got to deal with, and they will be dealt with.
No, I agree.
I don't want to sound cryptic.
And I think that the broader risk background is also constructive for Bitcoin. I mean, NASDAQ today is just, up another %.
Yeah.
We've had a couple tech names report earnings.
So all-time high.
All-time. Some of the Magnificent Seven names are trading at fresh all-time highs.
Wow.
Household wealth is at the dead highs, and the fiscal picture has not improved at all. And so I think there is, still constant demand for speculation, for store of value, and Bitcoin is a combo of the two.
Yeah, exactly.
And so
speculation on the future of store of value
is
one way that I think about it.
Correct.
Yeah. So you mentioned macro and the macro backdrop. FOMC is next week. So obviously next week we'll talk about it when it happens. But the market's expectations had been for a nice set of cuts, and then was it last week that, or even the week before, we had some very hawkish Fed speak come out that slightly altered it, but it's still. What are your expectations for next week?
Yeah, so we've got to get through like a bunch of data like between now and then. You've got, initial jobless claims, you've got the quarterly refunding announcement, you've got PCE data on Friday. And so, I think the market is going to focus on those data points up until FOMC. But ultimately, the data side of me tells me that the Fed shouldn't be cutting, and that the data is still super strong.
We don't need them to cut.
We don't need them to cut. I mean, initial jobless claims printed below 200. Like PMIs this morning were in expansion territory and surprised to the upside. And so there's a healthy and really good argument to be made that you don't need any cuts. But what I heard from Powell during December FOMC was that he is starting to think about a cutting cycle.
Yeah.
And he is very aware that in 6 months' time and in 9 months' time, that inflation will be at or below target.
They don't want below.
You don't want below. And so if you're in a world where that, inflation has come down a lot and is likely coming down further, like, why on earth are you having rates at such restrictive levels? And so this is kind of where I differ from the market a lot, is folks have been pushing back against a March cut. And there's about 10 basis points priced into that March meeting right now, which is the first potential meeting where they could cut. And I just think that if you think that you're going to have to be cutting in June, in September, and May, you might as well just get started with a 25 in March and signal that you are trying to get ahead of it.
Better to cut and then pause and then cut than to surprise the market with no cut. Is that?
Yeah, or it's also just you want to take a more gradual approach. 25 at a time, space it out longer, right? You'll have to, if you're trying to do at least 100, let's say you're about 150 basis points too restrictive right now for current market conditions, right? So that implies that you want to take rates to, call it 360-ish, 350, 360, 370, somewhere around there. Mm-hmm. And you don't want to mess with the election too much and be perceived going one way.
Want to get going earlier, right? Have it be going already.
Yeah, and go at a predictable pace, and you want to go steady. And so, while there's been Fed pushback from a lot of speakers, including Waller, most notably, I think you had, Jim Bullard, who retired from the Fed and is now working at Purdue University. He came out and was like, I could see the Fed starting cutting as early as March. Yeah. And he was one of the biggest rate hike guys during the hiking cycle. He was calling for 5.75 to 6%.
Wow.
At some point. He's like, when the unemployment rate is giving you the gift of not going up a lot, you should be very aggressive. But now he's just like, wait, where's inflation going to be in 12 months time?
Yeah.
And where do you want your rates to be when inflation is there in 12 months time?
This is the soft landing attempt. They want to, maybe if they look forward to where they think the data is going to be, they want to start cutting now so that the crash isn't hard. So it's not a hard landing.
Yeah, correct. Just trying to mitigate that a little bit.
The machinations of
the flip side to that, though, is the easing you've had in financial conditions. I mean, the stock market's just gone up a lot. People don't, people that are invested in the equity market don't feel poor right now.
Right.
And those are the same type of people that are going to be property buyers if mortgage rates come down. And so, and there's compounded, wealth effects to this, equity dynamic. And so I think, there's some risks to cutting early as well to kind of manage. But given the tone of Powell last December, I just think that he's committed to cutting rates.
Yeah.
And that's all that matters. It's not really data. It's really what does Powell want?
Yeah.
And what is the Fed actually going to do?
Yeah, and we can debate, and you've made a case for keeping them higher longer, but also, the real question, and I'm asking what everyone is wondering, is what will happen. And your point is that he's already sort of locked into this narrative.
He's going to be cutting. It's just a question of when and by how much.
Yeah.
And it's do you start cutting in May? Right? Do you allow 5 months into the year when if I knew for sure, if I was Powell and I was rates are too restrictive right now, right? If I knew for sure and I was really confident in that view, I'd start cutting.
Right.
I'd cut Yeah, maybe in Jan, like maybe in like Feb.
Start.
Just
Can always pause.
you can pause, but it's also
Spread it
doing
out.
25, and like
Yeah.
the logic is sound,
Yeah,
right?
yeah.
Nobody's gonna like disagree with him that, rates are probably too restrictive given like the inflation levels, and we kind of see where things are headed. And so, I think you want to take a more gradual, smooth approach, and
It's tinkering.
yeah.
It's just.
I don't know.
It's just
Yeah.
fun. No, I mean it's obviously this the way the modern economy and monetary policies work. It's just every time we talk about this, I mean maybe because I'm so interested in Bitcoin, the contrast is just so striking. Because now if it happens in March or May or anytime, I mean right, we have the halving in April.
Yeah, it lines up really well.
Yeah, just like last time.
Yeah, and it also potentially
more
the
of a
Fed might
narrative
be tapering its quantitative tightening.
So they're
efforts.
easing perhaps in rates and in balance sheet. At the
Yeah.
same time, Bitcoin is
It's just
credibly
supply.
and automatically tightening,
Yeah.
quote unquote.
And I mean, like, it's just ongoing.
That narrative writes itself.
It does.
Someone
It's
should
gonna-
ask Chairman Powell when he goes before Congress, like, what his comments are on the Bitcoin halving. I think would be a really great
I
question.
would like to ask him, like, hey, buddy, did you see the CBO's projections of where debt to GDP is going to be in 30 years' time?
This is your big hobby horse, and you're
Like
right.
it's like 250% from a congressional budget office.
What is
that is
the- yeah.
like not telling you like the full truth.
Like,
even.
you're an economist, sir. Like, is that sustainable for a nation?
Yes, like basically, I mean, this goes back to the whole idea of like fiscal dominance, right? Monetary policy is going to be dominated or heavily influenced by its need to finance the debt for the
but yet
government.
he refuses to talk about it. The main purpose
but
for it.
he's like, well, Congress sets fiscal
I know, but
policy.
I know, I get it, and they have
but
this
it's
need to
so
remain independent.
absurd to me.
Well, because
We're
it's-
just and like it's like you can't win with either party. They're just going to both spend more.
Yeah.
Right?
You've said this. Nobody gets elected saying they're going to, cut spending, really.
No.
And it's really
like,
escalated.
Zero. It's like either the Dems are going to increase spending like crazy or the Republicans are going to cut taxes like crazy. And your deficit's just going to end up being like absurd.
Yeah. There's
And,
a
like-
cognitive dissonance. Of course, we know why he doesn't want to come out because it's political, quote unquote. But in reality, it's not political. It's simple math. And it's also, if you're saying one of the main things driving central bank policy, to not talk about it. It's just like, and pretend that it's only unemployment and inflation that is what's driving your policy. Like that simply can't be true.
I completely agree with that.
And going forward, it definitely won't be true. Then they really will have to be thinking about it. Every day they don't.
And then the other part of it is like, that when you expand the balance sheet, right, that is permanent debt being added to, the economy and the balance sheet. And like, you can't tell me that it doesn't impact inflation and demand. Like when you increase your balance sheet by $6 trillion in a short span, right? Like that has led to a permanent increase in demand.
Yeah.
And so the inflation issue is perpetually going to be there, right? If you have to cut rates and manage the balance sheet around, the fiscal spending, right? Like, and every time we have job cuts and shit, unemployment benefits. Here's some more money. Here's some checks in the mail. Like it's just like it's hard to stomach.
Yeah.
And the problem is just the time disconnect. Like that's a trade for the next 5-10 years. Versus
Right.
monetary policy right now, and so it's just tough.
All right,
Long
Bim
Bitcoin.
Netabibi, my friend from Galaxy Trading. Thank you so much.